Okay. Welcome to this Saturday's live stream. It's always good to be here on this platform. And as usual, I have a topic for this next few minutes. The title being Scalping for Profit with EMA and RSI. Now, if you don't know what an EMA is or an RSI, let me know in the box. But before we even get into that, let's know who you are and where you're streaming in from. How long have you been trading? What do you trade? Crypto, Forex, stocks, futures. There's so much to trade out there. But the beauty of all the different platforms is the fact that, or the beauty of the different various ways of trading, is that the analysis, price analysis, is the same across the board. I'm just checking on my sound. If you can hear, if you can't hear me, let me know, of course. Forgive my voice because I'm just coming out of a pretty bad bout of, I guess it was the flu. You know how that can affect your voice. So I may not be belting it out today. So let's know what you trade. Let's know how long you've been trading for. Scalping for profit with EMA and RSI. So I'm going to assume everybody on this platform knows what an EMA is and what an RSI is. So that's my first assumption. Good morning, Kiana. Okay, school is in session. Oh yeah, don't forget to hit those like buttons. Yeah, I always forget to say that. That helps me and helps my channel. It just helps my channel grow, and YouTube likes it when they see a lot of likes and comments. Scalping for profit. So let's get right into it. And of course, we're going to go to the charts a little later, because as a trader, whether you're a scalper or a day trader or even maybe an investor, the charts is where it all begins. It's studying the charts is the ABC of day trading. It's not impossible to make profit without the charts, especially if you're an investor and you just invest. As a trader, as a day trader, our charting a bit like our stop signs or our road signs on the road. Tell us when to go, tell us when to stop, and so on and so forth. So we're going to move straight into moving averages. What is a moving average? And it is a lagging indicator, and a moving average is an indicator that you can put on your charts. Hello, Money HQ from Nigeria, and Sam Darnell from Zurich. I used to work in Lausanne many moons ago. I was living in the UK and I was working in Switzerland. I love Switzerland. Awesome country. But I never went to Zurich by the way. Moving averages. A moving average is just that. It is an average of price over the past so many periods or so many days. So if you see a 10-day moving average is the average of price over the past 10 days. A 50-day moving average will be the average of price over the previous 50 days, and so on and so forth. And so having them on our charts helps us to understand average price and where price action is in relation to average price. And so what does a moving average do for you when you have it on your charts? It helps inform you of the direction of trade. So as traders, we're always interested in the trend. You've heard it. Let the trend be your friend. But you got to know the trend, right? Is it uptrending? Is it downtrending? Is it not trending? So when it's not trending, it's kind of just hanging out. I like to use the term hanging out. It's not going up, it's not going down, and it's just sideways moving. And it can go on that way for a long time or a short time. So the moving average informs us of which direction the trend is going. Number two, it informs of us of possible entry, and I should say entry and exit points. So let's add that. Okay, and that's in caps. So let's start again. Possible entry and exit points. So that's what a moving average can do for you on your charts. Another thing a moving average can do for you is it can inform you of possible reversal points. So of course, if you're in a trade and you're going long in a trade, meaning you're profiting from this trade with price increasing, you want to know when price stops increasing and price begins to decrease. And your moving averages is or your moving average is a good indicator that can inform you of when this happens. And I'm going to demonstrate all this on the charts later on in the live stream, so stay on this stream till the end. And don't forget those likes. Okay. The RSI, on the other hand, where the moving average is a lagging indicator because it shows price. It shows average price from previous periods. The RSI is a momentum indicator. So what it does is it shows that, just like I wrote here, it measures the magnitude of recent price changes to evaluate overbought or oversold conditions. So these two points being the point of being overbought and a point of being oversold are two setups that can inform us of how we want to trade. So that's my first slide, second slide, third slide. So the moving average, and I've put some colors in here. So when we see green, we're talking about going long. And when we see red, it's about going short. So the moving average, all in all, yes, it shows you the trend. It also can inform you of entry and exit points. So you want to enter into a long position when you have a cross. And here I'm calling it a golden cross because I need to call it something other than a cross. Technically, a golden cross is, I believe, when the 50-day moving average crosses over the 200-day moving average. But a cross is a cross. A golden cross is simply saying price is operating above the two averages. We're assuming we have two averages on our charts, and we'll go into the averages that I use all in all on my charts. So when price action is operating above your two moving averages, then price is trending upwards, and the point at which they cross over is always a good point at which to get into a long position. The converse is the case if you like to short your trades, then you're looking for a death cross when price action is below the two moving averages. Again, I'm going to indicate that on the charts. On the other hand, with the RSI, the relative strength index, we're looking to enter into a trade when there is a cross above the 30 line. And we're looking to enter into a trade. I'll say that again. We're looking to enter into a long position when there is a cross above the 30 line. And we're looking to enter into a short position when there's a cross below the 70 line. So I'm going to go to the charts just to try to simplify all that. Okay, so I got this chart from TradingView. And TradingView, I mean, if you use any other charting setup, let me know in the chat box. Is there any other line here, which is the 70 RSI? And you will have a lower band, which is the green down here, which is at the 30 RSI point. And as price action is ongoing, of course, you see price movement on the RSI up and down within the band. So we're going to correlate the move of our RSI with price action. So you can see as price action moves upwards, so what's going on is there's a lot of buying action going on. So that correlates with, we'll start from here to the left of this chart. Down here where I'm where my little pointer is here, you can see price action moving and moving up. This is an upward trending market. Two things to note: price action is completely above those two moving averages, and the moving averages I have on this chart, and I tend to do a lot of my day trading with these two moving averages as the 10 EMA and the 20 EMA. EMA, by the way, stands for exponential moving average. And that's the one I tend to use as compared to the simple moving average. Okay. Now, so we have a nice uptrend, right? And you want to know when is a good time. I mean, you've been in this trade and you want to know when is a good time to exit the trade. Okay. So we're going to keep an eye on our RSI. So when RSI moves, you can see it's kind of moving up above the 70 line, the red line down here, up, and then it comes back down, it crosses above, and it crosses below. What we're looking for with the RSI is we're looking for a cross. A cross above is like keep a finger over the exit key. It's crossed above. Now, once it crosses above, it's saying there's so much buying that we have entered overbought territory. And with price action, you know, what goes up must come down. There's nothing, not even Solana. Not even Solana is going to go up forever. Anybody here who's in a Solana trade or who purchased Solana this past week? Let's just say Solana in the box, because that's our buzz crypto for the moment. So not even Solana has gone up constantly, so it comes back down. We want to know when to exit the trade. So once your RSI moves into overbought above 70, it's time to begin to exit a trade. Now, if you're a newbie trader, you're a conservative trader, then I will say, okay, as soon as the RSI peeps above or even gets close to the red line, the 70 RSI, exit your trade. You're super conservative. You're super new. You don't even want to lose money. You don't want to, you see some profit and you just want to take it. Yeah, you can take it as price cross, as the RSI line crosses above the red line. Okay. But really what's going on is RSI can stay above this red line for a long time, meaning we're overbought and we're staying overbought and price is still going up. Price is still going up. So within the space of this rectangle up here, you can see there was still some upward movement. You want to begin to exit your trade. And I'll take that again. You want to begin to think to exit your trade when the RSI crosses back below the 70 line, down below the 70 line. You're only thinking about it because it's just a momentum indicator. It's not the do-all, be-all of entry and exits. There's hardly any one indicator that can fully inform you as to a good entry or a good exit. You want to confirm your RSI with the moving averages. And I have highlighted here the death cross. So after price action falls below the RSI, I'll say that again. After the RSI drops below the overbought line, you want to begin to look out for this death cross before you exit your trade. Now, like I said, if you're super conservative, don't even wait for any confirmation. You see overbought, you jump out. But if you kind of want to push the ticket a little bit, you want to get a little more profit, you want to stay in for as long as you possibly can, stay in. And of course, you're always going to have your stop limits, right? So assuming if you enter the trade way down here, you've got your stop limit somewhere down here. And hopefully you've been moving your stop limits up as your trade has got, as you have continued to upward trend. I lost my words there. You move your stop losses. Okay. As you see the cross, this cross, which we're calling a death cross, then you see price action dropped below the 2 moving averages. That is the confirmation. Especially as a new trader, I wouldn't really call myself a new trader, but many times I will still wait for, this extra death cross. It just depends on where I am in the trade. Yeah? Okay. Now, so that is using the RSI and the moving average to inform our exits. Now, if we move a bit to the right side here of this screen, we see here price action. So I just look for another good spot because we have with trading, so you have what we call the fake outs, where it looks like price action is going where you think it should be going, and it just turns against you because there's just so many factors that contribute to the move or to price action. There's so many different factors. It could be some news. It could be some news of a merger. It could be some news of a disaster at the other end of the world. There's so many things that could affect price action. So we just try our best with technical analysis to forecast. But it is what it is. I like to call it's a game of probability. Sorry for calling it a game, but it feels like that many a times. So with your technical analysis, you're trying your best for it not to be a game because, we're trying to make a profit or make a living out of trading. Over to the right side here, we have RSI has dropped below the 70 and it's within the body of the 70 and it comes all the way down to the 30. So ideally what you're looking for is a drop below the 30, which shows a sell-off. There's like sell off. Look to the left. Sell, 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 sell. Price dropping, sell, sell. And we have that RSI all the way at the bottom of the 30 line. And hopefully before this sell-off, you got out of your trade when RSI crossed below. Over here, we've sold off for a while. You're waiting to enter into a position at this point, right? And in this case, RSI line comes down to 30. It does not break down below 30. So I'm just showing another scenario. Yes, it's good if it breaks below the 30, where it's being fully oversold. Price is dropping and has dropped to the bottommost. But the fact that it comes down to the 30 RSI and bounces back up is as good an indication of it crossing below and crossing back up. And so again, we want to confirm with a golden cross this time. Okay, so now we're looking for price action to go above the 2 moving averages, and that happens, I will say, this is a 1-minute chart. So we get the oversold reversal, this V shape down here, and that's a good sign that the trend is changing. Okay, but we now want a sign to actually enter. And so after we get that RSI signal, we have 1, 2, 3, 4, 5, I would say 6 minutes later, maybe 7 minutes later, then we get a golden cross. That would be the point at which I would now enter into my long position. with your stop limits, of course. And so you enter into your long position. You can see price action is all in all above the moving averages. We see it kind of dribbles down below the 10-day moving average. But like again, I said, if you're a really conservative trader, the minute it touches, say, your 5-day moving average or your 10-day, your lower moving average, you may want to just get out of that trade. If you're a little bit more risque, and you especially if you are familiar with price action for what you're trading, because that's another thing. I've been trading Solana for quite a while. Yes, I've invested in Solana, and I'm not trading with the bulk of my Solana, but yes, I trade futures, and I've begun to notice a trend, how volatile the price action is, and the like will determine how soon you're going to exit your trade. So for me, when it drops below the 10-day moving average, I don't personally get out of that trade. I will wait. My 20-day moving average is like my line in the sand. So you can see price action is still hovering above the 20-day moving average. This, guys, is how you scalp. And you can imagine doing this for a few hours a day. And there's enough opportunity, because price action comes down, then it goes up, down and up, and you're simply going in and out of your trades. Okay. I don't mean to make it sound so easy, but with trading, the technical analysis, I would say is 60%. Once you got your technical analysis down, that's 60% of certainty in how your trades will turn out. The other 40% is all down to you. Your how much you allow your emotions to determine how your trades go, how concerned you are about the money, how much you want to lose, and just so many things like that. All those other extra factors determine the rest of the 40% trade. So two people can get into a trade. One can make a 10% profit. Another can hang in there because he's ready to risk more, and he's wanting more profit but ready to risk more. The more profit you want to make, then you better be interested in as much of the risk. So if you're ready to make small profit, then there's a smaller risk. You want to make more profit, then there's a larger risk. So you stay in the trade longer, there's a risk that the whole trade go wrong and you come out on the negative end. But there's also that possibility that you will have an increased profit at the end of the trade. I will take questions after this. There's just one more thing I want to mention. And going back to the charts. No, going back to my docs. And it is that, your moving average. And I kind of want to assume you do this, but then I don't want to assume that your moving average is like a dynamic trend line. Now, when you draw a trend line, you're drawing it based on your lows and your highs, and you have this hard line that you extend over the future trading period, right? And then you want to enter or exit your trades based on if price action is below your trend line or above your trend line, right? But with your moving averages, they act as your trend line. Now I'm actually going to go to TradingView here, because that was just a print screen. Let me move this. Okay, so this is a nice one over here. We see this downward movement here, which nicely coincides with, no, that's not what I'm trying to do. Trying to figure out where my chart went. I did something. I don't know what I did. So let me go back to my print screen. Okay, just to keep it nice and safe. So here I am on my print screen. Let me not mess up this one. Okay, and to the left of the screen here, to the left of the screen, we see the 20-day moving average. You see it right there, right? That 20-day moving average, that is or can act as your dynamic trend line. So meaning price action is operating below it. Perfect. You're staying in your trade until this baby here, this huge, big green candle crosses above. It breaks the trend. You're out of your trade again. So, and you can see this happens even before any cross. There's not quite a cross here over, but price has broken the trend. Remember, again, the trend is your friend. So it's your friend for as long as you pay attention to it, for as long as you pay attention to where price action is in relation to the trend, right? And so that's, I just wanted to mention that. And here on the uptick here, to the right, also, we see price action is above, all in all, is above the yellow moving average. So now we can take questions. Isaac Oba says, what time frame will be ideal for entering a trade using RSI? 15 minutes, 4 hours, or daily? First thing is, Isaac, you don't want to use your higher up time frames to enter into a trade, period. You're never entering into a trade on the higher up time frames. I'm still trying to figure, something happened to my screen and I can't seem to get it back. Yeah, there's something going on. Okay, you're never entering in on your higher. You're always entering in on your 1 minute or your 5 minute. If you're super, super, super conservative, maybe you can enter in on your 15 minute. But as a scalper, the 15 minute doesn't work, because with scalping, you're entering into your trades on the smaller time frames because you're looking for a small move to make a small move to make a small profit, but you're using a lot of a greater position size. So with futures, you're probably going in on 10x or 20x, 50x, or whatever that is. And so you're looking for a small move to make small profit, and you want to get out of there. Because with the higher up your leverage, use of leverage, then the closer is your liquidation price. So you don't want to hang around with high leverage when you're in a trade. When you're in a trade on high leverage, you want to be in and out. That's why you need to time your entry. You're sure it's trending the direction you want. You jump in there with your higher leverage. Boom, boom, boom. 1 minute, 1.5 minutes, 2 minutes, 3 minutes, you're out of the trade. So don't ever use your higher up time frames to enter into a trade. You use your higher up time frames to determine trend, to confirm trend. You're looking at a trend and you're thinking, okay, I want to confirm that it's truly uptrending. Then you want to look on your daily, you want to look on your 4 hourly and all that. I hope that answers your question. And I have here an unknown player. That's actually his channel name. 30 minute and 1 hour and 1 day. You gotta have a question, because you trade on your 30 minute, 1 hour and daily. Is that what you mean, unknown player? Let me know. Be a little clearer with your question. Money HQ says, I sometimes trade with a 1 and 5 minute time frame. You know, all you're doing with the lower time frame is you're zooming in on price action. And what you're doing with a higher time frame is you're zooming out. So on the higher time frame, you can see, oh my goodness, Solana is moving up. It's been moving up for the past 5 days. You can see on the daily, it's green, green, green. But when you zoom in on the 15-minute, you see it's not all green, green, green. You see green, you see red. And to enter, to be exact on your entries, you definitely want your smaller time frame because you're zooming in. You're zooming in and you want to enter in when you know that the trend is going in your direction. Okay, and Kiana, do you only use the 10 and 20 EMAs for scalping? Nope. I think the point with the EMAs is to have two moving averages. I do trade sometimes on the 5 and the 10, so I'm zoning in even closer. So the 5 and the 10, I use that too. I'll use the 10 and the 20 as a pair, and then I'll even add a third moving average. I'll add the 30-day moving average, which, see, my charts are all messed up on TradingView. It's like I feel like I hit a key and something happened to my screen. But the 30-day, I would have that in red, and that would be my line in the sand. So if I had the 30-day on this chart, it would be underneath these two. And this down here would have crossed below my 30-day. And that's how the high up time frames will be. So, but when I'm scalping, I will use the 5 and the 10 or the 10 and the 20. All in all, when I'm scalping 20, my 20 tells me that's it. It's over. The trend is over. Like, get out of a trade. I hope that answered your question. Anybody in Solana? Or is there any other? I know XRP is another hot stock. Anything else that's hot out there you want to inform us of? Let us know. Okay, and so that's pretty much all I have for today. Thanks for being with me. I hope you learned something. And of course, with learning always comes the practice. And what I would suggest, really, I'm not really sure what the smallest amount is you can trade with. I did leave a link in the chat box. If you don't already have a KuCoin account, but I do my futures trading on KuCoin. And yeah, so use that link as a referral link. I get something. I don't even know what I get. And I think you guys get something too if you use the link. Yeah. But what I wanted to suggest is trade with very small amounts. Try out these strategies. One thing I've found with trading for a while is different strategies work for different personality types. Now, last live stream, I described myself as an optimist. I'm more an optimistic kind of person. So even when things are bad, just not even talking day trading, when things are not so great, I will always be optimistic, like that it will be getting better soon. You know, I'm an optimist that way. It will be getting better soon. Now with day trading, I found out I was having that mindset, like, oh my goodness, the trade has gone against me, but yeah, it's gonna come back again. No. And it took me a while to realize that my personality type was working against my day trading and was hindering me from becoming a profitable trader. And once I realized that, then I kind of changed and tweaked my trading style. So my natural personality works perfectly with long-term investments. Like, it's going to get better. Generally, most investments increase over a period of time. So that matches my personality perfectly. But with scalping, I found out my personality, you can't be optimistic when you're scalping. When the chart says clear out of the trade, then you clear out of the trade. You don't say, oh, maybe it's going to reverse. I mean, we've all done it. Like, after all, it's been reversing. After all, it's been uptrending these past 5 days. So it's going to continue to uptrend. No, it can decide to downtrend the minute you get in the trade. And you have to be able to identify that. Wait a minute. Okay, I'm going to cut my losses. I'm down 5%. I'm down 10%. But this baby is heading down. And then you need to jump out. And that is not the right time to be optimistic that maybe it'll come back. Yeah, but by then you'll be liquidated. Okay, Money HQ says look into Harmony One, Dedranch and Chain Guardians. Okay, so is that a hot tip to look into Harmony One? I think I've heard that. I do have a trading group, so I would suggest you guys get on that trading group, just because it's good to hear what's going down. You know, what's going down, like what's the hot stock. It's also good to be able to take the news and research. We're always saying that on our Telegram group, DYOR. Yeah. Do your own research. Yeah, this is a hot stock, but hello, do your own research. Don't say because I said it's hot, you jump in and you lose money. That's not on me. So check it out. It's always worth checking out. We might have a new Solana in there somewhere. Hit those like buttons. Let me know whatever it is, any questions, comments. That's always great. And if there are no more questions, Third Eye says, look into VXV. I've never heard that one. Look into VXV. I'll end this live stream on this note. If you're new to trading, it's so important not to jump in and begin to trade. It's more important that you begin to invest. It's important that you build a base. You can't have $100 coming in as a new trader with your strategies and everything. You're ready, you're hot off the press, and begin to trade your $100. Please, you will lose your $100 in very little time. But what you can do with your $100 is distribute it, diversify your portfolio, put a certain portion into certain stable. I mean, you could even put them into stable coins, because with stable coins, you will earn, I don't know, you earn these high rates, 7, 8, 9, 10% on your coins. Now, so what's happening is you're earning 7, 8, 9, 10% on money that would have been sitting in your bank account, earning you nothing. And then you could decide to do that over a period of time, or you could decide to invest your $100 in concrete cryptocurrency. So you go to CoinMarketCap and all your cryptocurrencies are ranked in order of market capitalization, right? So Bitcoin usually is hanging out at the top, pretty expensive. Ethereum is number 2. I don't even know what's number 3. I think is Cardano and all that stuff. But Solana is rising to the top of the chart. When I made the video on Solana, I believe Solana was at 19 or something like that. Right now, Solana is number 7 crypto in the world, and so XRP and all these kind of coins, put your money in those and just wait it out. Just wait it out over time. All in all, over time, that time could be even up to a year. You got to be patient. Your $100 possibly could double. Now you've doubled your $100. You can begin to trade with, if you like, 50% of it. I wouldn't trade with 50% of my account, but the point is you're not trading with your original investment. Allow your investment to grow. And that's all I've got for you today. Same time, same place next week. And use that link if you do want to open a KuCoin account. And have a wonderful weekend. Happy trading.